What is going on? Welcome back to Financial Journey. So today I want to talk to you on Rivian. I want to go over some of the recent news about convertible bonds, what it means for Rivian investors, but more specifically, why I feel that this is an overreaction. So I'm going to go over all that. Make sure you guys first hit that thumbs up and subscribe. I always greatly appreciate that. And with that said, let's get right to it. So at the time of doing this video, it is Wednesday evening. So you can kind of see the repercussions of the news after hours on Wednesday. As far as what happens on Thursday pre-market, could be anyone's guess. It could continue the sell-off or logic might prevail potentially. So I'm going to touch on all that, but it did have a sell-off all the way down to around 2150, settled at 2184, which does work out to be 7.77% in the red. So like I said, a pretty significant sell-off, all because of this news right here. So it does say EV maker Rivian plans 1.5 billion convertible bond sale, shares fall. So I do completely agree with this news. Obviously, it's justified that stocks do fall because dilution, whether it is happening today or in the future, it automatically does get factored into the stock price. So I am in complete agreement with this and the stock falling. I'm going to have an asterisk next to that and talk on it. But some things to note based on this news right here. So it does say Rivian's bonds will be maturing October 2030. So that's definitely a fairly good thing in my own opinion based on that, because by 2030, I do not think that Rivian is going to have any trouble paying this 1.5 billion back plus interest or whatever else. So technically, like, I think people are just overreacting based on this alone. But aside from that though, October 2030, they are anticipating to be profitable by the tail end of 2024. So once again, looking at their balance sheet based on their last earnings, they did have around 10.2 billion in cash equivalent short-term investments and 3.35 billion in debt. So once again, adding the 1.5 billion to the total debt is not going to hinder Rivian's kind of expansion plans by any means, or their inability to potentially pay that back by 2030. That is just completely absurd. But once again, people are factoring in essentially just dilution. That's the name of the game. But one thing I just wanted to add, so once again, looking at the title of this and when this came out, so October the 4th, there was another piece of news that came out earlier in the year, and it was this. And I know this because I covered this. I've been covering Rivian for a while, and it says Rivian shares fall as EV maker looks to raise 1.3 billion amid growing demand concerns. And that basically was the thing at the time. Every EV maker was essentially getting green bonds because it's advantageous, right? So based on this news, when it did come out, it did cause Rivian to have a very significant sell-off, because once again, as soon as they are talking about it tentatively happening, it does get factored into the stock price. So the same news is affecting Rivian twice. People seem to not realize that. I don't know. I know this new day and age, when it comes down to the stock market, basically people are forgetting last week's news. That's just how it is. It's completely stupid. But again, going back to this might be a good opportunity to potentially add, because whenever there is overreactions, there is usually a lot of value investors willing to raise up their hand and say, hey, I will buy that. Based on this 1.3 billion though, I think initially it was estimated to be around a 2029 maturity date. So even based on this news, the new news right here, this is still a better deal. So 1.5 billion and also a longer term for the maturity. So I think this is a win-win if you ask me. But keep in mind, I'm not a financial advisor. You guys always do your own due diligence. So like I said, I do feel that this is just a duplicate of March's news that once again I believe at the time did prompt a 9% sell-off. So definitely it's something just to factor in. But when it comes down to recent analyst ratings, people are still really loving Rivian's growth based on what they did announce recently about their Q3 delivery and production numbers, and them reiterating their 52,000 year-end target for deliveries. So as you can see, a couple analyst ratings, so about 4 Goldman Sachs, Mark Denley, if I'm saying that right, 59% success rating. And then there's also Trieste, Jordan Levy, who does have a 31% success rating, Chris McNally, 41%, and George, who has a 34% success rating as well. A lot of the price targets are fairly good. So 24, 30, 35, and 44. So once again, I think right now at this time, a lot of people are starting to see Rivian being the logical number 2 in the whole EV sector. So Tesla being number 1, and especially based on a lot of the things that they've been doing as far as future deals for charging networks, I do feel that Rivian is trying to build a big empire to eventually take down Tesla. That's just my own interpretation, of course, and I think analysts, based on a lot of these ratings right here, are a lot more optimistic. Similarly, why I did bring up recently on another video, a lot more analysts have been raising their estimates for Q3, and that has been done through here. So if you're interested, take a look at that video. It was done about 2 or 3 days ago. Also, on a side note, if you are looking for a lot of good compiled information, such as analyst ratings, analyst forecasts, short selling, everything under the sun, take a look at Interactive Brokers. All of this information can be completely free. Just click on the link in the description below or also the comments, sign up, and yeah, you get all this fun stuff. And also to note, going over here, the latest Morningstar report is still indicating $32.74 being the fair market value. So that is based on the assets that Rivian does have on their books. So once again, I feel like this is just an overreaction. And even aside from that though, even kind of taking it back to what it did close at, which was $23.69, that is still a pretty significant discount to its fair market value based on the Morningstar report and even just what analysts see it as. So let me know your thoughts. Do you think that this is an overreaction? Do you think that it is going to continue to trend down, or do you think that this is just going to get bought up very fast? So what's your kind of take on all of this? Don't forget to hit that thumbs up and subscribe. I always greatly appreciate that. And one final thing, take advantage of this promo with Moomoo. Just sign up for an account, throw $100 at it, and you get 5 free stocks. Each stock is valued up to $2,000. So this is also one of the best deals that you can get on the market, only up until October the 20th. Similar to Interactive Brokers, link in the description below and also the comments. With that said, I appreciate you all watching, and let's all make a ton of money on Rivian.